Hey everyone, here we are here again with TrueZone Trade with another installment of our mini course that we're putting together. In this course, we're going to talk about probably one of the most widely talked about methods that we use, and that's the Quasimodo. The Quasimodo is basically a setup that's used to um, tell us that price is going to turn, to tell us that, okay, the bias has changed. We're going to go from one direction to another. Um, so the Quasimodo is just a pattern. I know some people call it the up and under. It's been referred to as the up and under Quasimodo, where price, if let's say price was in an uptrend and wanted to turn down, price would make a higher high, a higher low, a higher high, a lower low, and then a lower high before turning back down in the direction of the new trend. And if we were going to go from the other side, if we were going up, it would just be the opposite. So as we get into this lesson, I'm going to go ahead and jump in with a quick schematic on a Quasimodo. So inside of Quasimodo, we typically have a trend that's been established. And then we'll see price make a high, a low, a higher high, a lower low, and then price comes back to the higher high. Price comes back here to our Quasimodo level before pushing price down. So we see that price, after making that lower low, it came back to our area here. We got to retest that area before going down. So we want a high. If price was going up, we want to see a high, low, a higher high, low, and then price comes back to our, let's make this a little bit straighter. Comes back to our Quasimodo level. Just here. And price comes back to our Quasimodo level before pushing back down. Now, in the opposite case, let's say price was in a downtrend, price is moving down. See price make a low, a high, a lower low, a higher high. Price will come back to our Quasimodo level before heading in the direction of the new trend. So if the trend was bearish moving down, we'd see a low, a high, a lower low, higher high, and then price will come back to our PM level. Now, that's basically that is our Quasimodo. That's what our Quasimodo looks like. That's how we know this is the pattern of the Quasimodo, a setup that's used that when price gets back to our Quasimodo level, go we look for price to move. We look for that to be the turning point in price. Same here, price got back to our Quasimodo level. Price then turned from that downtrend into the uptrend. Now, one of the biggest issues that we have that I've seen throughout the internet and just with different people teaching the Quasimodo is a lot of people get stuck with the setup and they just look at this and they look for this pattern throughout the charts. And anytime they see it, they feel like, oh, that's a Quasimodo. It's time to go. Anytime they see a high, low, higher, high, lower, low, they think that price is going to come back to this Quasimodo level before turning back down. And a lot of cases, they're wrong. Price just continues to go higher and higher and higher, and it's just a continuation of the trend. Now, the key to the Quasimodo is we always have to pay attention to, and when we're looking for the trend to change from a bullish trend to a bearish trend, we always want to pay attention to the higher high. And when we want to see it go from a bearish trend to a bullish trend, we always want to pay attention to this lower low. Now, those levels, those places are very important, and their placement plays a key part in whether or not the setup is going to be a strong setup or a weak setup. Is it going to turn or is it not going to turn? We can't just go around blindly trading Quasimodo patterns, just thinking that we see one here and there. Like, let's see, we just can't grab high, low, higher, high, lower, low QM levels. We have to pay attention to where these areas are coming out of, the higher high and the lower low. What is it coming out of? So typically, what makes a high Quasimodo a higher probability trade is when we see the higher high and the lower low coming out of a flag limit or a zone. So in this case, we want to see price hit our zone here, make the higher higher here before making a lower low. Then we come back and then we push down. In this case, we want to see the lower low come out of our flag limit here or our zone here. And we want to see it tested, broken, and then moved in and tested our level from the left. We're looking from the left. Now this zone would have been created from the left. Price came back, the lower low, tested it, and we've got our Quasimodo. So really quickly, I'm going to jump into two examples. Now, you all know I typically don't like marking out before, but because Quasimodos can be kind of time consuming finding, I went ahead and marked a few already. I marked two already. So here we see that we have a bearish trend. Price is moving down, and we see price land inside of our bullish flag limit. Now, this flag limit was found via tracking. The orders were tracked. We talked about that in our tracking part of the course to where we tracked to find this flag limit. So this was an area of interest. Now, what did we see as price approached that area? Well, we saw compression for one, but then we also saw a low, high, lower low, higher high. Price came back to our Quasimodo level before heading in the direction of the new trend, before heading up. That, my friends, is a Quasimodo. That's our bullish Quasimodo. We saw price was moving down. We got to our zone. We've got our low, high, lower low, higher high, QM level, and price took off. Here is an example of a price coming into the opposite direction. Price going from a bullish trend to a bearish trend. So we have here this flag limit here that was found via tracking. If you go back, you'll see that this broke a flag limit to the left. So that's why our important flag limit is here. And then we can see here, we've got our flag limit here. We got the break and the retrace there. And let's see what happened. Price comes down. We see we make a high, we make a low, we make a higher high, lower low. Price comes back to our Quasimodo level before pushing back down. Now, the key to all of this is I know there are I've seen people trade the Quasimodo with a stop above the high of this flag limit. Well, guys, price can break this high. Price could break this high and go to its true air target to the left, inside of this flag limit, and it would cause what we call a diamond. It's a diamond pattern. I'm not going to talk about the diamond pattern today. It's just simply when a Quasimodo, when the high of the Quasimodo gets broken on return, and then price breaks down. So, in order to avoid getting stopped out due to the diamond, I mean, how many times have you taken a trade and you've taken a Quasimodo trade and you've seen the trade trigger, your entry trigger, just to see price go up a little bit higher than the head of the Quasimodo, the high, and then it plummets down. That happens time and time again. So you want to make sure when you're trading the Quasimodo that your stop is above the flag limit that the higher high in this case or the lower low in the other case is reacting to, because price could go deeper into that flag limit. It can go deeper, higher than that high, which would cause a diamond. So really quick, just a quick schematic on the diamond, where in this case, a diamond could be, if price is moving down, we can see price make a low, high, lower low, higher low, lower low, and then go from there. So we want to make sure that we put our stops above our flag limit, because price could always go deeper into that flag limit and it could create a diamond, and we could see price go um, further down before moving up, or further up before moving down, depending on the direction of the trend. So now it's time to put in the work, put in the work into what we've learned, and go and find Quasimodos. Pay attention to them, see which ones work, see which ones don't work. I can promise you the ones that aren't working are probably the ones that are not reacting off of a flag limit. We always have to have a reaction to the flag limit in order to say that we have a strong Quasimodo. Remember, guys, flag limits are just orders. That's where the orders are. That's where the ITs are. They're moving orders from flag limit to flag limit to flag limit. So if we're not trading around or trading a reaction to a flag limit, guys, we're trading in space. There are no orders. I don't care what pattern you see show up. You can see a Quasimodo show up. You can see what you think is a diamond show up, and it's just not gonna work because you're trading in space and you're not trading um, your reactions to the flag limits. You're not trading as a result of a flag limit. The flag limit has to be there before the Quasimodo is there. The flag limit has to be there before the diamond shows up. These patterns are reactions to prior flag limits. Well, guys, that's it for today. That's another video in our installment today. If you want to learn more, these Quasimodos can be very advanced. We do talk about them in our Discord, because one of the biggest issues that traders have is which high to use. There are some cases where there may be multiple highs, and how do we know that price is going to react to that high or this high or this high? How do we know that price was going to turn here and take that high as opposed to this high or this high, or maybe even this high? Guys, those are things that we talk about in our Discord, and can't I would love for you to join us. That's it for today. Take care and have a good day.